Bitcoin is at $69,792. The Treasury just doubled its buyback ceiling to $4 billion for long debt. Your mortgage rate and crypto gains both moved because of that single policy shift. Thursday, August 20th, 2026. Today's agenda: Bitcoin briefly touched $70,000 on Wednesday. The S&P 500 added 0.5% to 7,708. Treasury did not double its buybacks. Weekly Jobless claims land at 38 Eastern. But stocks barely blinked while crypto exploded. Bitcoin briefly touched $70,000 on Wednesday, its highest since early June, and it took the shorts with it. CoinGlass counted close to $3 billion of leveraged crypto positions wiped out in a day. About $2.7 billion of that was short. For Bitcoin alone, it was the largest short liquidation on record. Now, the part your trading app will not give you. The Treasury Department said it will at least double its buybacks of long-dated government debt. The ceiling rises from $2 billion to at least $4 billion per operation, targeting 10 to 30-year maturities. Long yields fell and the dollar hit a 3-month low because buyers front ran that new bid. Cheaper money cuts the cost of holding an asset with no coupon, which is why gold and Bitcoin rallied together. So why should you care if you own no crypto at all? Because your mortgage quote, your bond fund, and every growth stock you own sit on that same long curve. Months of stacked short positioning did the rest, because once price cleared $66,000, the buying turned mechanical. The level that decides the next leg is $70,284, where the next block of shorts sits. If price clears that band, $73,245 comes into view. If Bitcoin instead breaks $68,000 on a close, the move folds back into the June range. Watch for daily close, not a wick. The risk is that a squeeze gets read as a trend because forced buying leaves no buyer behind it. Now the other half of the story. Wall Street barely blinked. The S&P 500 added 0.5% to 7,708 and snapped a 3-day losing streak. The Nasdaq gained about 0.2% to 26,331, and the Dow a similar amount to 53,463. Rates did the real work, which is why the scoreboard looks lopsided. The 10-year Treasury yield fell 5 basis points to 4.65% off Tuesday's 20-month high. The 30-year fell 9 basis points to 5.19%. It had touched 5.34% this week, its highest since 2007. The dollar index hit its weakest in more than 3 months because lower yields shrink the reward for owning it. Long treasuries had their best day since February 2025. Gold rose more than 3.5% to about $4,493 an ounce. Crude booked a 4th straight session, Brent near $92, and the American grade near $86. Bitcoin traded up close to 8% near $69,100, and Ether did far better at roughly 18%. Everything that hates a high long rate rallied, because a lower discount rate lifts the value of a distant payoff. Everything that needs a paying customer went nowhere. That split tells you Wednesday repriced available cash in the market, not growth. Expect it to hold, while the long end is the only thing moving. And here is what that means for your portfolio. Almost nobody connected on Wednesday what actually happened at the Treasury. It did not double its buybacks due to Iran or Federal Reserve policy. Instead, it entered an auction war with technology companies. Nomura estimates borrowing by major tech firms now equals about a quarter of the Treasury's net issuance to private investors, roughly $200 billion, up from 5 times less just last year. Investment-grade firms sold close to $1.5 trillion in bonds this year, a 36% increase over the prior period. Much of that debt is long-dated with 20 or 30-year maturities matching data center lifespans. Consequently, both long corporate supply and long government supply compete for the same duration investors. When these supplies converge, term premiums rise, driving the 30-year yield to print a 19-year high. This dynamic moved crypto positions because buybacks targeting 10 to 30-year debt directly impacted those markets. The counterweight is real. Technology issuance represented only 13% of total new issues this year, while financials accounted for more than 45%. Total federal debt also crossed the $40 trillion threshold recently without any server rack involvement. Watch for the next jumbo tech bond deal to see competition show in prices. Meanwhile, minutes from the July 28th and 29th meetings suggested a stronger desire to hike rates than the final vote indicated. Policymakers held funds at 3.5% to 3.75%, with 9 votes against 3 dissenters. Governors Beth Hammack, Neil Kashkari, and Lori Logan each wanted a quarter-point increase, but received no support from other governors. Many participants believed higher rates were needed if inflation did not fall further or conditions tightened enough for the 2% target. Chair Kevin Warsh also floated cutting scheduled annual meetings from 8 to 6, though nothing was decided this year. Expect no policy change before September 16th, with traders anticipating a hold in September at roughly two-thirds confidence. The risk is misplaced confidence, because a chair offering no company outlook makes every meeting live and unpredictable. So what are we watching for tomorrow? 3 things to watch. Weekly Jobless claims land at 8:30 Eastern, and after July's surprise job losses, the tape cares far more about this print. The Philadelphia Fed Factory Survey for August arrives in the same window, the first clean read on whether crude is reaching input prices. Flash Purchasing Manager surveys land on Friday, and by Friday night, the August picture is either intact or not. 8 days from now, Kevin Warsh gives his first Jackson Hole keynote, my call. I think the long end gives back part of Wednesday's move before that speech, because a $4 billion ceiling is small against weekly supply. A buyback changes who holds the paper, not how much paper exists. What would prove me wrong? A 30-year yield closing below 5.1% this week, or a second announcement lifting the ceiling again. Either would leave the intervention bigger than it looks, making the gold and crypto bid a beginning rather than the end of a crowded short. The risk is that everyone watches the coin and misses the curve, because the curve is what prices your mortgage. Bitcoin is at $69,792 and gained 7.5% today, while the S&P 500 snapped its losing streak to reach 7,708 after a quiet but massive policy shift in Washington. The Treasury Department doubled its buyback ceiling for long bonds up to $4 billion per operation, specifically targeting 10 to 30-year maturities. This aggressive intervention caused yields on the 10-year note and 30-year bond to fall significantly as buyers front-ran that new bid, directly lifting asset prices across crypto, gold, and stocks.